Well, good evening, everyone. This is David True. Those of you who've attended our events before will know me. I'm the president of NYPAY, and NYPAY has been running events of this sort for a long, long time now, going back before 2010. I'd like to welcome you to this. And before we get started, I'd like to thank our sponsor, Further Advisory, without whom none of this would be possible. We're looking forward to a really fantastic event tonight, but first I'd like to go over some housekeeping. For questions, please use the chat function and we'll filter on those questions as appropriate. We'll have a Q&A at the end. And if you're not a panelist or the moderator, please mute yourselves and turn off your camera so we can focus on those who are providing the discussion for us. And also, as you probably know, this session will last around 60 minutes. It will be followed by breakout sessions of smaller 4 or 5 people, so you can get a chance to get to know folks who've been involved in this and participating in this event a little more closely and have a little more direct chat. And with that, I'd like to thank you for attending. This is going to be a fantastic discussion. I'd like to turn it over to Ron Mazursky, who will be moderating tonight. So have a good time, and we'll talk to you later.
Thank you very much, David. Hello, folks. Thank you all for attending the Cross-Border Payments is Real-Time, the Next Step event. I'm the moderator for today's session. I am the founder, board member, and officer at NYPAY. I'm also a managing director at Pagility Advisors. That's my kind of full-time day gig as opposed to my nighttime NYPAY gig. In today's session, we're going to be doing a couple of things with our expert panelists. We're going to be first talking about what today's cross-border payments environment looks like. We're going to talk about what kind of market needs are being met or not being met. We'll talk about the challenges that are being faced within the cross-border payments area. We're going to dig deeper, specifically in real-time payments, because there's a lot of stuff happening around the world, not so much happening here in the US. We're going to talk about financial institutions and fintech market demand for cross-border payments and, real-time payments, and then what kind of innovations we see facing the cross-border payments arena. What I'd like to do is introduce you very briefly to the 4 panelists and then ask each of them to do an introduction so you know who they are and who their company is and how it's related to cross-border payments. I'd like to start with Janice Ang from the United Nations Federal Credit Union. And I'll be with you in 1 second, Janice. I'm just going to mention all the names and then call on folks. Erin Moore from SWIFT. Joe Higginson from Convera, and Jonathan Holland from MasterCard. We've got a really good panel. We've got financial institution. We've got a couple of different fintechs from different areas. We've got folks that cross over into different areas of payments. And with that as a quick background, let me go to Janice and ask you if you could do a quick intro so people know who you are.
Thanks, Ron. I work for the United Nations Federal Credit Union. So we are a credit union that serves the UN community around the world. Just to give you a bit of an idea, I mean, we are purely a consumer membership, so we only serve individuals. And because our members are UN, they are predominantly located outside of the United States. So, so in reality, a lot of our transactions or payments are actually cross-border. So that's kind of interesting that we are on this topic today. And also, just to give you a bit of background, prior to joining UNFCU, which is just over 2 years now, I was with a fintech startup on cross-border bill payment for about over 4 years. And prior to that, I was with an international remittance company. Many of you might have heard of MoneyGram International. I was actually based in where Joe is, in Sydney, Australia. For a number of years, and before that, I was actually with banking, in personal and professional banking at Citibank. So it's been a bit of a mix in my journey, but what I'm doing now at UNFCU is actually very different and very interesting. And I lead the global payment solutions operations and the strategy part of the business for UNFCU. Thank you.
Thank you, Janice.
And by the way, I meant to say, I'm also a member, sorry, Ron, I'm a member of the Faster Payments Council as part of the cross-border working group. And I think that's been actually very beneficial. And UNFCU obviously participate in the Faster Payments Council as part of the cross-border working group.
Thank you, Janice. Joe, let's go to you and ask you what you're about and what is Convera about.
Sure. Thanks, Ron. Hi, everyone. Joe Higginson. I work for a company called Convera, and we're in the business of moving money around the world. We're a global company. Previous iterations of us would have been known to most of you, Western Union Business Solutions, and before that, a company by the name of Travelex Global Business Payments. So we're in the business of moving money faster. And I suppose my background, I've worked in banking, both in the go-to-market side and the product side for over nearly 25 years now. And look, this is a really interesting discussion today because as a global company, as you would expect, Convera has to look after businesses, and my division that I look after is the financial institution division, which is across all of the Americas. And we are actually helping banks, credit unions, and fintechs activate payment capability to move money cross-border, both in a traditional way, I suppose, or a way that they're comfortable with. And that crosses over from either using SWIFT or real-time payment mechanisms that are around the world and popping up everywhere. So really looking forward to today's chat, Ron.
Thanks, Joe. Appreciate you being here. We're going to go on to Jonathan. And Jonathan, you're with MasterCard. Can you give us a quick overview of, I think most of us know what MasterCard is, but what do you do and how do you relate to cross-border payments within MasterCard?
Absolutely. Thanks, Ron. And thanks for that kind intro in the beginning. So I'm going to lead with this. I'm actually a member also, just like Janice, of the Faster Payments Council. So I've been there for a number of years, know some of the folks that are on this panel here. I'm with MasterCard, been with MasterCard a little over 6 years. Have done a variety of different remits within the company. I mostly recently look after the acceptance side. So if you think of like some of the big merchants that we deal with, I manage some of the bigger relationships that we have for the company. And that's really from an acceptance side. If you think of like the issuing side, that's also a gigantic arm of our business. Before that, I was in the crypto community. So I spent about 5 years in crypto, both on the product management and product development side. So I built a lot of those solutions that you see in the market today. And if you look at some of the press releases, I'm intimately involved in some of those. How I got started in that is I was a correspondent banker for many years on the street. So I worked at Citi, similar to some of the other folks on this panel. Citi has a dearth of alumni across the payments industry. And I was a correspondent banker. I did wholesale payments there. I also did liquidity. And because of that knowledge, MasterCard hired me to help spin up a correspondent banking business-like model on the blockchain, which is kind of how I got introduced to crypto. And I know that environment well, working with a lot of central banks around the world and kind of spinning up some of their solutions. On from there, I also worked a variety of different treasury functions, FP&A functions, finance functions. I also did a very brief stint standing up corporate center over at AIG. So that was a very fun project. So very nice to meet you. Thank you for this, this venue.
Thank you, Jonathan, for joining us. And Erin. Erin is with SWIFT. Can you give us a quick background so people know what you are and who you are and what SWIFT is?
Sure. Erin Moore from SWIFT. I'm based out of New York City. I support SWIFT's cross-border payment solutions portfolio. To give you a background on who SWIFT is a global member-owned cooperative, and we provide safe and secure financial messaging for our members. We're made up of commercial banks, credit unions, central banks, investment institutions, securities firms, corporates. We have over 11,000 members in over 200 countries. And in terms of background, I've been at SWIFT for 4 years. Before that, the clearinghouse. And then, of course, 13 years at Citibank. And for hobbies, I'm an avid traveler and beekeeper.
And beekeeper?
Yes.
Where do you keep your bees?
On a farm in Maryland.
Wow. Well, keep them in Maryland. Wow, that's very cool. Thank you, Erin. Thanks for being with us and contributing to this webinar. I just want to point out one of my colleagues, Barry Tooker, who can't be seen unless, Barry, you want to show yourself, and then you can be seen. Barry is on the U.S. Faster Payments Task Force for cross-border payments, and Barry is my colleague and co-creator of this event. And Barry works with me at NYPAY and helps put together sessions like this in areas that are of interest to our members. Cross-border payments actually was the #2 topic that our members voted on being of most interest, that they wanted to hear more about. And so we created this event specifically to meet those kinds of needs. I trust that your questions will be answered during the course of this session. But if you do have questions, please, as David mentioned, put them in the chat feature, and David will collect those and ask those questions at the end of our 50-minute or so panel. Now, I've done a lot of consulting work with companies in the cross-border payments arena, and one of the things that I found in speaking to a number of community banks in the US and credit unions is that although many haven't really implemented cross-border payments, they're beginning to look into it, especially because of changes that are going on in technology, making it easier to deliver products to the consumer. So it's not surprising to me that more folks want to hear about cross-border payments, and we're going to have our panel of experts talk about a number of different components of this. The first question I want to start with, as we were talking about it amongst ourselves to make sure we had a good story, was one, to understand what do we mean by traditional cross-border payments. And Erin, I'd love to start with you maybe and ask you to give us what you view as traditional cross-border payments, and then see if we have any other responses or thoughts from folks on our panel.
Sure, I think it would be great. I'll give the context, at least within the context of SWIFT. So SWIFT was formed over 50 years ago, originally founded by 239 banks from 15 countries. And really what they tried to do is they needed a platform or a secure platform to exchange information. And they wanted to be able to talk to each other with the pure goal of just reducing errors and speeding up transactions as they went cross-border. And so, as you can tell, the needs of the community have evolved much further. Before in the intro, I mentioned we're now comprised of not only the commercial banks, but credit unions and the central banks, and then throw in their investment institutions, corporates, and that's 11,000 members in over 200 countries. But in terms of I guess you could say the traditional correspondent banking model, to make it really super simple, if my company wanted to pay a vendor in another country, let's say in Australia, I would go to my bank and initiate a transfer. Well, unfortunately, or most likely, my bank in Newark, Delaware, would not have a direct banking relationship with the vendor's bank in Sydney, Australia, for example. And so there would be a reliance on my bank's relationships with other banks to basically get those messages and those payments cross-border until eventually they are deposited into my vendor's bank. So when we talk about the traditional correspondent banking model, you think of SWIFT, and it has changed. And we can talk later about what's changed in that sort of model. It's no longer, the 239 banks in 15 countries. It's much different looking today.
Super. Maybe Jonathan, could you give us maybe any other thoughts on that or expansion on it?
Yeah, I mean, I think at its essence, Aaron was right. I mean, it's just really hangs off of the correspondent banking model. You're relying a lot of financial institution markets to handle these payments in cash for participants in the market. And there's a variety of different steps that you have here. And I just want to go through these at a high level just to kind of set the room and set the stage, because a lot of what we're going to talk about today hangs off of these steps, right? So if you think of first you have to initiate this payment. So a sender really from that, remitting bank has to send that into the system, and you're using SWIFT to do that. And the correspondent banking model really is supporting those smaller downstream institutions to kind of traverse those payments through the ecosystem. So in using Aaron's example, if you have, that bank in Iowa or whatever it is, interfacing with Citi here in the States with a branch, you may be interfacing with Westpac, as an example, who might have a sort of nostro-vostro relationship with that ecosystem. So you can trade these liquidity pools, if you will. So in the correspondent banking model, because you don't have necessarily direct relationships overseas, you have to kind of use these banks in between. And that's where the SWIFT network is quite powerful. Embedded in that, and not to get into too much of the weeds, there needs to be currency conversion here. So it's either on the beneficiary side, which is kind of like the last leg, or on the remittance side, somebody has to kind of do that FX translation. We'll get into what that means for the ecosystem. And then when you think of pain points of how this, the pain that inflicts on the correspondent banking model, some of that's going to come out here as an expense, right? So that's what the FX component partially is about. And then there's certain regulatory compliance. A lot of these banks, even the smaller institutions on up to the correspondents, have to kind of be in this regulatory compliant ecosystem. There's a lot of fees and delays in that system. We're going to get into that. And then ultimately, there's the end recipient or beneficiary of funds. So we'll talk about these steps when it comes to this model. But what I'm trying to outline is when you go through this payment journey with us, there's lots of different steps. There's lots of different intricacies, and we'll start to unpack that as we go forward. That's what I'd like to add.
Jonathan, just for clarification, MasterCard is an existing network around the world, but has built out a cross-border payments capability, as have other players in the market. Can you just describe a little bit, how do you work? It used to be all and only SWIFT moving money, but now SWIFT has other partners. There's a lot of crossing over. What does MasterCard do? You've got a network of banks that are already connected?
Yeah, so that's a great question. We have a robust member of banking network, and we can reach funds in over 220 countries. The way we do that is because we have an underlying core network, we can push direct into different accounts all over the world, and we have that network to do that. We also have a cross-border services arm of the business, which is similar to other, banking type FX correspondent banking models, where we're able to push funds in all over the world. So not only just our networks and other competing networks, we also have, a lot of emerging fintechs that do this as well, right? So, and that transcends also into the crypto community, which we might touch upon here in the near future. But it's all about how you hypothecate that money throughout the banking chain. But we do it in a variety of different models. It's really kind of like a push to card scenario, and it goes directly into the account, direct into the beneficiary bank account. So yes, we have a robust set of capabilities, which are kind of like in kind to the traditional FI space.
Yeah, now, the last extension of that, I'd just like to ask Joe, you represent this world of fintechs that there are a number of companies that are similar to you in nature. What makes you guys different than the other folks that you've heard about?
Well, we like a blend of both. So we sit in both ecosystems, right? What both, I suppose, Jonathan and Aaron are talking about. If I look at SWIFT as an open source network, which you can activate and be a participant in, and then there's closed loop networks similar to what Jonathan was saying, where it's an ecosystem you tap into. We look at ourselves as an aggregator, right? We try and stay agnostic in the whole process. We act on customer demand. So if one of our financial institutions wants to be able to offer their members or their customers the ability to send money cross-border, we can offer up all those different palette of services, whether they want to route it via SWIFT or whether they want to do it as a low-cost routing payment, or whether they want to send it across a card network using, another aggregator. We're plugging into that. So it gives us the ability, I suppose, service up to people that wouldn't be able to access all of those at once and not be beholden to, one separate or one individual supplier. So that's, I suppose, how we look at ourselves. We are trying to stay ahead of the curve the whole time by having a very extensible platform. We're able to move a little bit faster when new technologies emerge. Jonathan, you were talking about blockchain, and we once again stay agnostic to that. It's not like it's a flag that we say we do this. It's more about our customers coming to us, issuing that demand notice of, we would like to be able to do this. Are you interested in it? And then we'll business case that up and look at that as a model. And Ron, it becomes an advantage to us because if we do something for a customer in North America, because it's a global platform, we are also able to offer up those services to customers down in Australia, where I'm at the moment. So it's really about the world of aggregation and moving with the times as they become, more demand driven. Some of the more, I suppose, topics that we're into today is about real-time payments, and it's going to become a more and more talked about topic, as was ISO 20022 last year and this year, and topics before that. So it's about, for me, being ready and having the capability to move fast with the technology, and you can really only do that in this day and age with new platform, new technology.
Thank you, Joe. It kind of leads me to the next question. We've talked about traditional and what happens from different vantage points, but what needs are being met today or not being met today through the existing networks that are in the marketplace? And that's not meant to be good or bad. It's just where is the opportunities lie. So what needs are being met or not being met? Maybe Jonathan, we could start with you.
Sure. Yeah, absolutely. I think there's a variety of different needs that are met, and then I would also say needs that are also partially met. So we'll unpack that here in a moment. In terms of needs met, it's really facilitating global trade and commerce, right? So businesses can pay different suppliers, vendors, and partners across the ecosystem. Also to be able to support consumer purchases, right? So individuals can purchase, goods. There's a lot of e-commerce traffic cross-border, especially in places like MIA and LATAM and all over the world. It's really kind of just supporting like the foreign vendors. Number two, remittances. So there's a lot of different workers that are rehypothecating funds out of the country into different markets. There's also, the facilitating of members in, family members in home countries, which is really like a crucial component of the household when you think of emerging and developing countries. Investment and financial transactions. So investors can move money between different current countries to help diversify their portfolios. There's a assorted variety of different corporate transactions that happen. So companies are able to manage their global financial operations, M&A activity and the like. Number four is access to foreign markets, right? So currency exchange. There's a lot of companies that will originate dollars, and they may have to make payments in different currencies. So this whole correspondent banking and the faster payments ecosystem helps facilitate the exchange of currencies, enabling travel and study abroad programs and business operations and the like. So those are the main ones that I believe that are met really in the ecosystem. And then there's some needs that are just not or partially met. And we'll get into some of these. There might be debate points, but speed. Cross-border payments are not necessarily known for their speed, and I think we'll get into the faster component of this coming up here shortly. Cost, a lot of high fees, multiple intermediaries in this chain, so they all have their fees, and when you make a cross-border payment, it could be $50, $100. That's not even including the FX conversion that you have. And there's a lot of hidden costs there too. So as I mentioned, there's exchange rate markups and that kind of thing that just really add to the total cost. Transparency. Participants in the ecosystem may or may not be transparent, may not have their either funding transparent or, where the payment is in the leg transparent to them. And that's where kind of like, I think Aaron will touch on this, like where Swift GPI has become, the cornerstone of what Swift is doing, which is kind of like that tracking mechanism for payments in the ecosystem. And I'll go quick on the other ones. Accessibility. It's not really necessarily, the banking infrastructure isn't accessible by everybody in the participant list. That's why you have correspondence. Security and fraud. So security is paramount in an ecosystem like this, and there is a lot of fraud, in these ecosystems. And the banking community and MasterCard, we really kind of take security to the next level. We try to protect these networks, not only ours, but others as well. On the partially met or not really met circle or arena is regulatory compliance. So there's a lot of burdensome requirements. The last I checked, there's over 25,000 different rules. I mean, you're bound to trip one of those when you enter a payment into the system, as small as, all the way up to, some sort of sanctions, et cetera. And then I would say the last one on my list is innovation and flexibility. These systems are very rigid. They're very robust. They work. Flexibility is not necessarily rooted in their nature, although they're getting better. And I think they're also, this ecosystem is working on the innovation angle when they see other smaller closed loop networks, not necessarily meaning mine per se, but others. If you think of like the crypto community, how they've been able to kind of like move fast in certain innovation circles. You're seeing things like CBDCs and other core, cross-border angles starting to accelerate their adoption of different technologies. So there's a lot to unpack there, but yeah, a lot of met and some not met.
Thank you, Jonathan. That was pretty comprehensive. I appreciate you thinking through those things. I'd like to ask Janice from a FI perspective, what do you think is being met or not being met in the industry by the existing networks?
And I'm going to talk more from a consumer's perspective, because obviously, based on my time at MoneyGram, which was very much a consumer-based model, as well as now at UNFCU, which is, about our individual members, right? I mean, consumers have a lot of options these days. So I think their needs are actually met when it comes to sending money cross-border to, to look after families or to pay for expenses overseas, etc. There are a lot of options. They could send cash, you could send the payout, could be cash, could go straight into an account, could be a wallet, which is obviously it's a growing trend around the world. Everybody knows wallet is the big thing that is shifting the global world as far as consumers' ability to hold money in their wallet, receive money in their wallet, etc. So I think that's a key one. And I think with mobile wallet, the money can be received in a much near real time, right? So I think that's really good. And I think Jonathan touched on the push to card. That is becoming a new trend, sending money into, push funds into a debit card as a way to, it's kind of a faster and probably a simpler way in terms of a user experience to move money into an account via the debit card way. Now, and those are what I call the needs are being met. So I don't think consumer needs are not met. They have options. But when it comes to where the challenges or where, potentially it's not being met or the hurdle, I think, and I saw a couple of messages, I think it's very much around the whole compliance. So I'll share something that we experienced at UNFCU. So as you know, the UN community is all around the world. A lot of them are in high-risk countries, as we call them, or crisis countries or whatever, in addition to the OFAC sanctioned countries. Now, they have the needs to actually move their funds. But because of their location, they are actually being, because of where they are as a sender of the funds, some of our partners who help us or help our members to move monies face the challenge of whereby, because they're in those countries, which are deemed as restricted or prohibited, then we run into those difficulties. So I think in our case, it's pretty unique. As we always say, the members that we serve from UNFCU are very unique just because of where they are. And there are some concerns from AML clients, from our partners who move out, whether it be an FI or a non-FI or a fintech. Even if they understand our model, I think there's still this nervousness about the fact that where they're located. And that's what we are observing from our side.
Thank you, Janice. You've opened up the discussion on challenges. I think I'd like to go to Joe and ask you about challenges. What do you see? What kind of challenges exist in cross-border payments? And there's a number of different categories you can talk to. I think we've thought about what about the regulatory environment? What about geopolitical? What about privacy? What about changing relationships between various parties? Legacy technology. Joe, what do you see as being the challenges in the cross-border payments arena?
I'm in the business of solving problems, so I like challenges. The first thing I think about is the understanding of cross-border payments. I think that's the biggest challenge we all face because we're so familiar with the topic. We can talk about this and wax lyrical about payments for hours. And taking that story down to, like Janice was talking about, consumers, or what Jonathan was talking about, businesses, and you're trying to condense down a very complicated process to something very simple. Because in this day and age, our expectations, as we're all consumers here, we want to be able to solve problems in 3 clicks of an app, right? So I think that the macro challenge that continues to face us is how we make that process very simple for both consumers and businesses to be able to move money fast because they don't want to understand the complexity. So if you take that down a layer, Ron, where does that complexity sit? Like, what causes those challenges? And I'm just resurfacing both what Janice, Jonathan, and even Erin said. It's the legacy nature of how this system grew up. It started with 249 banks agreeing to share messages just so there was some commonality. We are in an age now where we are seeing, the swift push to migrate banks and credit unions or any connected party to ISO 20022 format messaging. Now, that may seem simple to the rest of the world, but we're talking about fundamentally changing the language of the cross-border payment community and being adopted by domestic schemes as well, right? So domestic schemes are upgrading their messaging syntax to ISO 20022 as well. So what that's heading towards, it's a complex problem and it's a challenge, but it's trying to force us to a world of interoperability so that both closed loop systems and open loop systems can actually share messages across it. And that's just the payment messaging. You take it to that next level where we've got the compliance oversight, wanting to make sure that we've got a complete and accurate record of both the remitter and the beneficiary of the payment, which is the funds transfer regulation, right? Capturing all that information is hard when you've got disparate systems not talking to each other and leads to those delays that Jonathan was talking about throughout payment transmission. So it's a challenge, right? But it's a solvable challenge. And I think we'd all probably agree. We imagining this world we were in now 10 years ago, where we would have platforms that are cloud-based, accessible 24/7, moving money real time, you'd go, we're dreaming. But we're here. We're on the doorstep of it, and it's happening. So I think, it's not the panacea, but it is certainly moving us in a direction of interoperability. The game becomes transparency in solving that challenge and making sure that people can feel that they trust whoever they're using to do their cross-border payment. And it's simple. And it's taken down to that level where I go, oh, I can do this within 2 or 3 clicks on my phone. And I trust, if I was banking with UNFCU, I trust that team to be able to get my payment from A to B, and they've taken care of it. That's the challenge, simplifying it down for everybody to consume quite easily.
And by using, I assume, various networks in the marketplace. Because look,
Yeah.
from a geopolitical perspective, in certain countries in Africa, for example, or South America, crypto is not permitted. And so you can't use that as a mechanism for moving funds. But there are many other approved networks. Certainly Swift and certainly MasterCard offers two of those capabilities. Maybe I could ask Aaron, maybe you could talk a little bit about what's happening with Swift and the challenges that you guys have noticed, and perhaps changes that you are beginning to test out or implement that might be dealing with these challenges.
Sure. I think Joe's touched on a few of them, but right now what we see is a lot of the legacy systems and software that exists today. You've got to remember, a lot of them are hard coded. Some systems at banks could be results of a lot of mergers and acquisitions. So it's sort of patchworking those together. You have to remember there's proprietary messages. So Bank A may use a different way to talk to their corporate clients than Bank B. So we're also seeing that a lot. In general, there's a lack of standardization and systems can't talk to each other. And so, on top of that, you have the fact that the payments business is a big business and players are really scrambling to get a piece of the pie. They're off developing apps and systems and networks, whether they're open or closed, developing new technologies. And this is great. But what we are seeing in terms of trends is a lot of fragmentation. It's definitely growing. And that's really what Swift is trying to do, is bring together, okay, we've got the legacy systems and the way that we talk to each other that's been around for 50 some years. And if you're aware, you're not aware, we are migrating our language to one common language, which is really foundational, which is ISO 20022, is the language that's to be used when exchanging payment messages on Swift. So everybody can just talk with the same tongue and use the same dictionary. And so, that's what we're doing, some of the things that we're seeing. But in addition to that, just beyond the language, incorporating other players that are partners on the phone or on this webinar. It's not just banks anymore. We have fintechs, we have payment service providers, we have aggregators, we have complementers who are servicing their clients for connectivity needs. So we're sort of bringing all these pieces together, the legacy and the new, and then just throw on top, keep layering it like a cake. The newer technologies where folks are trying to address some of these pain points that Jonathan brought up earlier. The crypto space, the digital assets, right? Tokenized assets, CBDCs. And the idea is that Swift is integrating not only all the financial players to work together. You think of the membership that we have of, it's not just banks anymore. It's all these other members that I've mentioned. We're doing that in an organized manner so that we can talk to each other in a standardized way. And of course, all while we are trying to keep our costs low, remain resilient and secure in terms of our network and the way that we exchange messaging and communicate. And then all under the umbrella of regulatory requirements, but we still need to remain flexible. So it's kind of it's sort of a clash of the titans. A lot of challenges for the payment industry, a lot of disruptions coming together in a short time frame in a cost-pressured environment.
Okay. Now, we see that real-time payments is becoming a reality slowly in the U.S. We've got FedNow, we've got the clearinghouse, but we don't really see much in cross-border from the U.S. going out or from the outside coming in. Or maybe we do. So, Aaron, any comment on that, or Janice?
Sure.
Either?
Sure. I mean, we've already talked about how complex it is just to get payments cross-border and with all the players and legacy systems and new technologies. So it's not a surprise. that we don't have instant right now. I just, for fun, I did some fact checking, looking at, where did we start talking about instant payments? And in 2008, that's when we were talking about UK faster payment service. And then I looked in old slides. Back in 2018, it looked like there was around 32 instant payment infrastructures up and running, with 17 planned. And now, if you just Google, you're looking at over 80, which highlights really the growing importance of real-time payments in the global financial landscape, which is enabling faster, more efficient transactions across markets. So that's pretty interesting. But in terms of Swift, I can say just 7 years ago, we launched Swift GPI. And that was, the concept was, you'd send a payment cross border, you weren't 100% sure or even 50% sure of when the payment would reach your beneficiary, how quickly it would get there, what costs were associated, and so on. And now in 2024, we're reaching 90% of the end recipients' banks within an hour. And that's, we talked a little bit earlier about speed targets, right? With the Financial Stability Board, or it was mentioned, I think Jonathan mentioned, that current 90% reaching end recipients in an hour, that already exceeds the speed target that's been set by the Financial Stability Board to achieve 1 hour processing for 75% of international payments by 2027. So we've been leaps and bounds. Even though we may not all be on instant payment rails, there is progress. You can see it just sort of by the historical outline that I shared.
Let me ask Janice, how critical is it from your perspective as an FI to have real-time payments implemented in some form?
I think real-time payments is becoming the talk of the town, right? I think even at the consumer level, everybody is becoming more aware. There is an expectation. I think from the, if I think of the need of our members, I mean, they may have a need to, pay for a certain bill or certain expenses. And I think there is this need to get money as quick as possible. But I think going back to what Aaron was saying, there is now, approximately 80 of these real-time payment schemes, but a lot of them are domestic. Now, as far as cross-border, it's concerned, obviously, for US, we'll talk about that a little bit later. But I think from a cross-border perspective, there are a few successful cases that are out there, but they're very specific corridor. And I think Asia is leading the world. And India is the one. As we all know, UPI is leading the world as far as their domestic real-time payments is concerned. But I think India has been really critical in terms of their ability to develop all these very specific corridor, cross-border real-time payments capability with countries like the Asian countries like Malaysia, Indonesia, Singapore, and also with France and UAE, from what I've learned of late. So I think UPI is a great success story there. And if you think about other cross-border, whether you call it, I would say they're more or less real-time now, is SEPA. I think SEPA in Europe has done really well in terms of how they have developed their instant credit transfer. I think from what I understand, it takes 10 seconds. And you're really you're moving money within the whole SEPA EU network so that people can actually, move their funds in almost real time now. And I think in addition, I thought I read something recently that says there's a SEPA instant mandate that is now confirmed to start. I think they're going to start receive in January next year, and then send is going to follow 3 months later, in April 2025. So what I think, where I think the ability of some of these countries being able to drive the cross-border real-time payments, I think is you need collaborative parties. I think the central bank is going to be key, because a lot of that is kind of mandated by the central bank, but also bringing the FIs, the industry players, the PSPs, the FIs, everybody to be on the same page. I think that's how the successful model has been able to be accomplished in some of these corridors that we are seeing. And for US, I'll have to say not yet. As far as cross-border, we've got Fed now, we've got RTP. I think that's already the beginning, right? And as we all know, RTP by TCH, they've already done a collaboration with EBA, clearing and SWIFT, Aaron, with SWIFT in terms of the IXB, right? The pilot. Now, I'm not sure exactly what the outcome is, but I think everybody is really eager to know whether that's going to be, the pilot's going to be a success, because that will really open up the road for US to participate in these cross-border payments, at least with the SEPA or with the European side of the payments, cross-border payments. And lastly, I think it'll be interesting to see when Fed now is going to think about cross-border. I know people have asked, but I don't think the Fed is going to say anything. I think the goal now is to really get Fed now up and running with as many participants, as many FIs to participate in Fed now within the US system itself. So we shall see what happens there.
When do you think, maybe I'll ask Joe, when do you think real-time payments then will be coming to the US? It sounds like FedNow is, talking about 3 years plus before something happens there. Do you see something happening in the US at some point soon?
Yeah.
Or no? Or
Let me just take a step back for a second, because that was really like what Janice was saying there. I look at real-time payments a couple of different ways. What we were talking about just before was the accessibility and the demand driven by people to be able to access it. So let's go into why. I see a world where people want choice, right? And I'll use the FedEx analogy. If I want to send money, it needs to be there really quickly. I want to be able to activate a service that does that, and therefore I might have to pay a premium, right? So the demand-driven access points, real-time payments will be demand-driven by consumers and businesses for different use cases, right? When we talk about consumer payments or retail payments, maybe that person is paying themselves, or maybe they're paying something, buying something to the e-commerce sort of position that Jonathan mentioned before, or from Janice's old world, it might be a remittance, and a family depends on that, and that's a consumer or a retail payment. A business may need to make a payment so that they are releasing goods off a dock. They might be an importer, and they might have an urgent need for speed and that payment to be there, or they may pre-plan it and make that payment a week in advance. So it really is about optionality for me. That's sort of piece one, Ron. And we have that today. That's available today, that sort of ability to choose which mechanism of delivery. It's back to the point as I said before, you've got to simplify it down, though, and offer up those choices. Now, from a US perspective, the advancement of FedNow and RTP just becomes an optionality. If I look at the inverse side of it, my global company wants to be able to offer it to global customers so they can make payments into the US in real time. And that's what's not unlocked. But for a US bank, credit union or consumer base or business base to be able to make real-time cross-border payments today, they can do that if the platform they're using can access in SEPA Instant or the schemes that have grown up around the world. It brings me to a point, though, that I think you can look at the demand driving side of it. Then you look at the next piece, which is what risks come with this, right? So we've got to screen a payment, make sure that people have enough money in their accounts, lock in a foreign exchange rate, and that all has to happen. And we're talking about an instant payment. That all has to happen before you release the funds, right? And what we've got to give both consumers and businesses is the confidence that that money is going to the right account. Now, what these real-time payment schemes need to do is have some sort of validation of beneficiary, some sort of validation that you are actually paying the right individual. Otherwise, it will open up a world of fraud, right? So the quickest way people find you look to what fraudsters are doing and how they can take money off people. We start talking about real-time payments. It's no surprise that it's become a big hot topic. And I bet you there are a lot of actors in the financial system that are going, hang on a minute, there's an irrevocability here about a real-time payment that can lead to fraudulent use. So I look at it from the demand-driven side, and I'm not trying to be overly cautious. I'm just spelling out the education has to be there as well, Ron, that we need to be able to validate that your bank account matches your name. And there's only a few schemes in the world that are doing that, right? There's confirmation of payee in the UK. There's something being launched across the Eurosphere. Embedded within FedNow and RTP are the concepts of request to pay as well. So you're starting to reverse the logic of how payments can be transmitted. You're actually requesting money. And I think these are as equally important mechanisms that financial institutions and suppliers to financial institutions do. Swift, I won't talk to Erin's world of qualification, pre-qualification, because that's her topic, and it's the same thing though. We all need that alongside real-time payment networks to be able to make this a very trusted capability.
You know, let me ask you, thank you, Joe. I'm going to go to you, Jonathan, and ask you about, you deal with financial institutions all the time, and there is or isn't demand for real-time payments from their perspective or from the FinTech partnership perspective. What can you tell me about that?
That's a big question. There's a lot of demand for real-time availability of funds, for sure. There are different flavors of that. And I'm just reading some of the comments. I've been trying to answer these as they come in. But Thomas raised a really interesting point. And if you extrapolate that out a little bit, a lot of these schemes are like synthetic real-time, meaning I'm using my own balance sheet to facilitate these payments, to basically push a payment into an account, and you have the assurance that the money is there and it's available for use. And there are other schemes that will synthetically pretend that it's there, and settlement may not happen for a day or two. So we have to kind of just be careful of that. That's just kind of an asterisk over a lot of this stuff. But I would say we have a lot of demand. If you look at some of our push-to-card capabilities, that product continues to drive all kinds of different adoption and use cases. If you think of like the last mile of delivery of funds, especially here domestically, we are now in an in-demand economy where you have people that work different and they demand to get paid differently. They want to get paid pretty much on the day that they're working. And I'm talking like certain section of gig economies, and you also have businesses that are paying providers, or like they're third-party providers in real time, and they charge a premium to do that, right? So we're able to facilitate that. I mean, I think that just demand is just going to increase. I don't think it's ever going to slow down. Lastly, around the like fraud and security angle, I just wanted to bring this point up because Joe raised it. Banks have benefited by the fact that this has been slow for some time, because they can stop payments in its tracks. Once it becomes like this real-time world, when payments are out the door, they're out the door. It's harder to claw those funds back. So, that's where the safety and security comes in. I just wanted to kind of throw that in there. So thanks, Ron.
Super. I do want to ask, we're kind of getting towards the end of our time here. I think I'm going to run a little bit over, but oh, what the heck. I'm in charge of it, so I can do that. I wanted to ask you guys, each of you, a question about innovations. And look, we've talked about real time being one of those areas of innovation that we think will happen, but it will happen in its own time. It's not going to happen. There is demand for it, but it's not out of sight demand. We're now moving in the US towards an interest in having cross-border payments, but not necessarily real-time payments. But once we have enough people doing FedNow and the clearinghouse instant payments, you'll start seeing a movement to that other area of real-time payments for being cross-border. So let me start with you, Janice, representing the consumer and the financial institutions themselves. What do you see? What kind of innovations are occurring that is impacting cross-border payments and beginning to change the future of cross-border?
So I think open banking is an interesting one. I mean, it's becoming more prevalent now for US. I know some of these open banking players out there, it's still very much US domestic focus, like where you were talking, I think, Joe, you were talking about account validation, account ownership. I think this is where we are seeing the capability of the open banking. I think ideally, we like to see some of these open banking players to be able to extend that account validation at the cross-border level. I think, knowing the ownership of these accounts in another country, I think would be a key innovation. And it would also help to facilitate, the real-time risk management side of things when it comes to, just payments in general, the quick payments, and manage the risk. The other one that I thought, nobody seems to talk quite a bit about today, except Jonathan spoke quite a bit at the start, blockchain technology. I think, blockchain technology has this potential that is currently being overlooked. I mean, it was really a hot topic for a few years, and then when the crypto issue came in, it kind of died out. But the reality is, I think blockchain technology has a lot of good capability in there that really helps with the innovation. The last one that I would say is, I think the ISO 20022, what's happening there, the fact that we've got the, ISO 20020 is this global movement of developing structure-rich data. And those structure-rich data is really going to help with, it's going to benefit from a risk management perspective, from an operational efficiency. It's going to bring more operational efficiency. And also it'll bring transparency to cross-border payments. So I think there's a lot of, there's always been a lot of concern about, getting transparency, whether it be fees or delivery timing and all that sort of thing. I think that's what we're all looking forward to, how ISO 20022 is going to change that from, innovating the whole cross-border payments. I guess last but not least, AI. I guess AI is kind of the future, right? To see how that's going to further evolve the whole, the whole global payment space, whether it be domestic, cross-border, it doesn't matter anymore. Yeah. That's my take there.
Super. Now you've covered a lot of items there. Aaron, could you perhaps take yourself off mute and then is there another perspective you'd like to give us, or focus on one or another of those innovation categories?
Yeah, sure. I'll do the combo. So we talked a little bit about account validation. So great. We have a pre-validation solution at Swift where you can validate if the beneficiary's account is open, if it's able to accept payments, is it going to the account of the name, name on the account you're expecting it to, and even if it has, if that payment requires certain regulatory information. We can do that today with API calls. You can do that before you even put your payment on Swift. But what we're doing now is innovating a bit further and we have a massive amount of data that flows over Swift, a massive amount of payments. Just to give you an idea, we turn over the global GDP every 3 days over the Swift network. So that's how much data we have. So we're combining pre-validation, the concept of pre-validation, with AI, right? And what can we use that for good, to use that for good? Can we, detect even more errors upfront and eliminate that before it gets rejected at a beneficiary bank? Or can we use that to detect fraudulent or nefarious activity? Can we repair? Is there a way for a transaction to be repaired in flight? And speeding up those exceptions and investigations types of things. So that's what we're looking at Swift, is how can we use the data that we have combined with AI? And one of the examples I've given today is with the concept of pre-validation.
Super. Thank you. Now, Jonathan, you might be coming at it from a little different perspective. Can you, I know that, each of these things you can probably talk on for a while. Is there anything that sort of pops up in your mind as being, we need to keep our eye on innovation because it's happening now, or it's utmost importance?
Yeah, I mean, I think first and foremost, Janice spoke about this, which is open banking. That's just really taken a lot of my customers by storm. A lot of them are starting to wake up and use this. And it really is from like an account to account perspective. When you think of like, I can validate that account, or I can peek into somebody's account and make sure that there are good funds available. I mean, that kind of is a very powerful tool. And I think we're also starting to see that in other, applications for, the benefit of cross-border payments. I think when you think about blockchain getting under the hood a little bit and thinking about, I mentioned this on the chat, programmable money. So when you have an activity that happens and you can translate that into what currency you need to hit and then trigger a payment basically in that succession within a millisecond, you're able to do that with blockchain technology. And then not to mention like the whole global ledger about it, right? So I'm not thinking of like your grandfather's blockchain. I'm thinking more of like the blockchain of the institutional nature. So you're thinking about like banks are starting to spin up those networks that are overlaid on top of some of the open source currencies and networks that we see today. And then I think probably some of the more drier enhancements that I think that will come that will change the space of cross-border is just really enhanced regulatory. It's not like a technology per se, but I think there's going to be some frameworks from a regulatory perspective that you'll start to see will help hopefully open this space up a little bit globally. So those are some of the things to keep it simple.
Okay. Well, thank you. And I don't want to say last but not least, Joe, I would love to hear from you in the last minute or two. Where do you see, you're responsible for the Americas for cross-border payments. Where do you see innovation impacting movement of funds, in out of North America and LATAM? What do you see happening? What's the innovations that's going to change the movement of funds?
Well, thanks. Well, firstly, Ron, I'll thank everyone for sticking around because we've gone over the hour. So yeah, I know I'm between you and being able to shoot off, but I think you hit the nail on the head, Ron. What money in and money out, right? That unlocks liquidity movement and it speeds up payments. We've talked today largely about an outbound payment movement, but what excites me is what Janice talked about before, the open banking side of this revolution and unlocking the data within the domestic schemes, because that speeds up companies like ours. We rely on people settling to us so we can send money. And in a traditional world, that largely relied on extending credit, right? And having some sort of facility to be able to make sure that we could move the money fast. But we are also taking a risk on the other side because money has to come in to match the left-hand side of that transaction when it's cross-border. What real-time payments and what open banking does is it unlocks that and it gives a faster path to settlement and speeds up payment. So I think of it as an in and an out, as all financial institutions do. Money in means you can move money back out again. And that's the speed that excites me. The innovations that I think are critical, that the battlegrounds, as I call it, within our business when I'm talking with my teams, it's that transparency. It's unlocking that transparency through Swift GPI or other metrics to be able to measure payments speed. It's pre-validation or enrichment. How do we give all of our customers the tools to be able to make sure they've got the beneficiary right, track it, trace it, look up ahead, peek into accounts. I like that one, Jonathan. I'm gonna steal that. And lowering the unit cost of a transaction that comes through technology. If you can automate using AI platforms at the back, that's what we're doing too. To give that optionality of speed, routing rules, different tools and tricks that really help unlock that speed. That's what excites me, Ron.
Well, guys, thank you very much for your time. We went way over, but the conversation was just so good. I couldn't stop it in the middle of anything. We needed to go through some of these. There's still many more topics. I almost feel like this is version 1. with a version 2 to happen. I'm going to ask David, might you come on, and is there a couple of questions that didn't get answered that you think might be worth us going through before we do maybe only one breakout session?
Yeah, there are a couple of questions. There are actually a fair number of questions. Some were answered in the discussion string. There's one about cost that comes from Philip Andre, and he writes, back in the 1990s, I was able to transfer money between Swiss franc and Belgian franc, I guess, for 5 Swiss franc with a value date of plus 2 days. I tried to do the same from the US and it was a $35 charge. I then tried to send money between 2 clearing banks here in the US, and they wrote a paper check with 7 days to clear. Are we today able to send for a 5 Swiss franc or equivalent between 2 banks anywhere in the world and a value date of 2 or less? So really, it's a cost and speed question. I think the cost one is the most interesting because I know cross-border have typically been a more expensive way to spend money than elsewhere.
Any of our panelists able to pick that one
I
up
would
and
say
respond?
I can. It depends on the value. For the most part, it's going to cost money only because banks have their own cost structures. This is, if you think of like from a bank's perspective, this is the most operationally burdensome arm of the bank, right? There's a lot of infrastructure that's set up here to facilitate cross-border payments, and there's an inherent cost to that. Not to get into proprietary numbers, but it's going to cost more than 5 in most instances, especially with a cross-border payment. I think a lot of that fee comes from the FX conversion of it, really. And it depends on the institution, right? And there's different tiers of institutions. If you think of like you and I, it's almost akin to getting FX in an airport kiosk. You're not getting the best rates, right? If you're a big correspondent, you're moving billions a day, you're going to get a much better premium rate. So that inherently incurs a natural cost to it. But then there's also just the cost of the correspondent banking chain. Every single correspondent in that chain kind of has their own fee to it. So it kind of can get cost prohibitive. But I will say that some of the emerging players that are coming into the ecosystem are really kind of like challenging that model and making it much more cost beneficial for consumers.
Okay, thank you, Jonathan. David, any one other one you want to throw out there since we've
eaten up our time because it's been such a good discussion. Here's another one from Marcia, and Marshall Klingensmith, and she says, I'm curious as to how countries that are on the sanctions list conduct payments today. Is there an alternate payment ecosystem? If so, is there an overlap between this alternative and traditional ecosystems? So if you're on the sanctions list, how do you get money in and out?
Any thoughts, guys, on how any of you might deal with it?
The short answer is you largely can't if it's a sanction, if you're a US-based domiciled company. I look at it this way. There are ways that you operate to your own licenses, right? So every company has their own regulatory license. I think Janice's example before, if you think about the customer base, there are a number of sanctioned companies in countries in the world you just cannot send funds to. There are then higher risk jurisdictions, right? And what we do with our customers, as an example, is work with a credit union or work with a bank to get comfortable as to who are they making payments to. And I would imagine, I'll use Janice as an example, I would imagine a lot of her members are, politically exposed people or are in both in higher risk jurisdictions, but also, going to trigger some alerts from an AML or a compliance or a sanction screening tool that any actor in the foreign exchange payment space would have to adhere to. So you can work with customers like that to risk accept what will be the nature of those underlying payments, and sort of ties back to the cost element that Jonathan was saying. That is burdensome, but once you pre-program a lot of systems and get comfortable with the underlying remitters and the beneficiaries, you're flagging them in your own systems to be able to create whitelists, i.e., faster payment mechanism through routing rules. That's a way to start address higher risk jurisdictions. But insofar as sanctioned countries, what they can do and what they are doing to move funds around, well, that's exactly why we have compliance programs to monitor that, and why sanctions are issued. The idea of them are supposed to be punitive, right? To be able to reduce the movement of funds for those countries for the reasons that the sanctions were put on in the first place. But the higher risk, and there's only like 5 countries in the world that fall into that category, 5 or 6. But the higher risk jurisdictions are easily accessible if you just work with your financial institution provider to be able to make sure that you're lining up what your business model is to what your needs are. There are, certain cost implications to it, but we're all about serving the underlying customer or member to make sure that we're helping them. So there is a way to help those jurisdictions, but it depends on where your licenses are jurisdictionally as well, though, Ron, too.
Okay. Well, thank you.